Hi everyone, this is Rob Roy of Elliott Options, and welcome to this trade review of our recently closed trade ID number 182 on the SPY in the volatility strategy. If you've been watching these trade reviews recently, you know we had one heck of a run on winning trades within the impulse strategy. The volatility strategy had gotten a little bit quiet, but boy, this is exactly why we have the volatility strategy and that we recommend for our subscribers to have both, because the markets sure have been volatile lately, haven't they? So here was the entry point, and I'll show you the chart. Only 2 contracts we sent out for a total risk of $180. Our subscribers are welcome to put as many multiples of the alert that's sent out as they want. You could think of your own trade account size and what you might have done on something similar to this, but here was the chart, and we'd had a couple big down days. You know the rule. No security in any time frame, gets very far away from its 10-day moving average, so we were oversold here short term, so we sent out the calls expecting a bounce back. Not a whole rally, we were just looking for a bounce back towards that 10-day moving average. So that was on the 25th. So 2 days later, after one day of going sideways, boom, another down day. Now we're extremely oversold short term. Again, big separation between where we're trading currently in the market and the 10-day moving average. So that allowed us to add to our calls. So we added 3 more contracts to give us 5 contracts total. On March 3rd, you can see that we moved back to the upside here. There we are, rectifying that oversold condition, trading up to the 10-day moving average, just exactly what was expected. But then we also had this expectation of a move to the downside to the previous 4. When an Elliott Wave 5 pattern ends, you retrace back to the previous 4. So not only were we going to take the profit in the calls, you can see there the $285, but we're also going to add puts to capture the expected downside move from there. Here's the chart where the next day we move back to the upside and close on the 10-day moving average. Now the day before we had closed down here. We had touched the 10-day moving average, but traded down and closed down here. The next day we go back up, test that 10-day moving average again, and closed right on it. That gave us an opportunity to add one more put. So we had 2 puts on now, and then boom, the very next day we get another big drop in this volatile market. It's fun when you can trade like this, when things are moving so fast. That's why you probably have heard this before. If you haven't, it won't be the last time in the world of options trading. Volatility is an option trader's best friend. So we had a big drop to the downside here. Now, of course, we didn't come all the way down to the wave 4 target yet, but sometimes it's about taking profits when they're there, not necessarily price targets. Profit targets come into play as well, and especially when you're earning over 159% in just 8 days. Hope you found that informative. A lot of information in that one. Look forward to talking to you again next time. Take care, everybody.